Next week's economic calendar is packed with key data and central bank decisions that could shape market volatility. We start on Monday, October 27th, with durable goods orders from the United States. The previous reading was negative 2.7%, and traders will be watching closely for signs of recovery in manufacturing demand. On Tuesday, October 28th, the spotlight moves to the U.S. Conference Board's Consumer Confidence Report. The prior figure stood at 94.2. Any major change here could influence expectations for household spending and retail performance. Wednesday, October 29th, brings a wave of central bank actions. The Bank of Canada will announce its rate decision, currently at 2.5%. Later, the Federal Reserve follows with its benchmark rate sitting at 4.25%. And to close the day, the Bank of Japan will release its policy decision, an event that could impact yen volatility overnight. Thursday, October 30th, is one of the busiest days of the week. Early in Europe, we get German GDP for the third quarter, expected after a previous decline of 0.3%. Then, at 8:30 a.m. Eastern Time, the United States releases its own third quarter GDP estimate, forecast around 3.8% growth. Shortly after, attention returns to Europe with the German CPI and the European Central Bank's interest rate decision. The ECB currently holds rates at 2.15%, with the deposit facility rate at 2%. Later that evening, China publishes its manufacturing PMI, which last came in at 49.8, a key indicator for global growth sentiment. Finally, Friday, October 31st, closes the week with critical inflation data. Europe reports its annual CPI, last at 2.2%. The US then releases the core PCE price index, the Fed's preferred inflation measure. Month over month is expected at 0.2%, with the yearly rate near 2.9%. To wrap up the week, we get the Chicago PMI, an important gauge of regional business activity. Overall, it's a week loaded with opportunities and potential volatility. Traders should prepare for sharp movements around the Fed, ECB, and BOJ announcements, as well as the GDP and inflation prints. Stay disciplined, manage your risk, and trade with a plan.